Tesla's earnings are often the most anticipated earnings every season. It's because Tesla is one of the most talked about companies. It's because there are so many retail investors out there who are invested in Tesla. It's also because Elon Musk is so popular and so controversial. But it's also because it's one of the most popular and innovative companies out there. Often during earnings season, there's so much buzz on social media as well as legacy media around Tesla. Leading up to the earnings, all my feeds were full of people talking about Tesla. So naturally, I wanted to talk about it too. As I was listening to their earnings call this time, I thought of an idea. What if we looked at all the investing lessons that can be learned from investing in Tesla and their earnings this time? Before we start talking about anything, I want to make it clear, I do hold Tesla shares and nothing in this video is financial advice. And by the way, if you hold the S&P 500, you hold Tesla shares as well. I'm not going to spend a lot of time talking about the earnings. There are plenty of videos out there that you can watch. I recommend this one. This video is also not about propping up Tesla. We are just going to focus on some facts and look at some investing lessons that we can learn from it. Let's begin. First up, we have a very valuable lesson when it comes to investing and timing your buys. This time leading up to Tesla's earnings call, there was widespread speculation that the stock would drop. Despite so much speculation and so much negativity out there, Tesla went up the next day. Not just that, it went up 20%. This is illustrating that market sentiment can often be misleading, and there's a very valuable lesson in investing over here, and that's do not follow the crowd. Warren Buffett famously advised, be careful when others are greedy and greedy when others are fearful, and this basically applies in this situation. This time it was quite crazy. Everywhere I looked, people were negatively talking about Tesla. Even on CNBC, there was somebody negatively talking about Tesla every single day. And don't even get me started on people on Twitter or X talking so bearishly about Tesla. The lesson here is basically to conduct your own analysis and form independent opinions rather than following the crowd. There are also so many super investors out there who often say that contrarian thinking can often lead to much better investing opportunities, and you should try to do that too. And this is the best example of this. While people were anticipating a 10, 20, 30, 40 whatever percent drop in Tesla, instead it ended up flying. So why were people so bearish in the first place? It's because they were anticipating that the sales will come in lower, margins have been dropping and they will continue dropping and they will not be making enough money. They were trying to look at the recent trends and trying to apply it to Tesla as well. However, that's where the next lesson comes in, and that is growth isn't always linear. Let's quickly look at some numbers. Tesla reported Q3 revenue of $25.18 billion, up 8% year over year, but slightly missing the analysts' expectations. The company delivered over 460,000 vehicles in Q3, marking a 6.4% increase year over year. One of the other numbers that was very impressive was the 52% year over year growth in the energy generation and storage division. Overall, their net profit came in at $2.2 billion as well. We'll also look at some other numbers in a bit. So these numbers are quite impressive, but Tesla's numbers have been looking quite impressive in the recent past as well. But if you look at historically, Tesla has faced significant challenges such as its near bankruptcy in 2016 and production hurdles in 2019. Despite these setbacks, Tesla has always shown resilience and long-term growth, and that's what we are seeing here as well. But it's been a bumpy ride, and this growth hasn't come in a straight line either. Charlie Munger once said, if you're not willing to react with calmness to a market price decline of 50% 2 or 3 times a century, you're not fit to be a common shareholder. Basically, his point is that when you invest in individual companies, you have to get ready for a bumpy ride because the growth doesn't come in a straight line. You have to understand that growth comes in waves, and this will help you keep a long-term perspective, especially during volatile periods. So while I was talking, I did mention that Tesla missed a bit on its revenue, but why did the stock price go up then? It's because Tesla achieved an impressive operating margin of 10.8 this quarter. Their gross margin is also up year over year, now at 20%. This is actually indicating that Tesla's margins might have bottomed and now they are just going up. So why am I talking so much about this? It's because it brings us to the next lesson, that is efficiency matters when investing in a company. During the earnings call, Elon Musk actually emphasized the importance of reducing costs and increasing production efficiency. Generally speaking, efficiency allows companies to stay competitive, especially in cutthroat industries like the automotive industry. Tesla is basically committed to delivering high quality products at lower cost. They are streamlining operation and optimizing resources wherever possible. This focus on efficiency not only boosts their profitability, it also maintains their market position as a leader. This actually brings us to the next investing lesson, and that is market leaders often have advantages. Tesla has been a market leader in the EV space for a very long time now. Tesla Tesla benefits from significant advantages over its competitors like Rivian, Lucid, and all the legacy car manufacturers out there. When it comes to EVs, they have access to better resources, they have their own manufacturing, they have larger economies of scale, and more robust innovation pipelines as well. It's a very well known fact, and I know it firsthand as well, that some of the smartest people in the world are actually working for Tesla right now. And this is true for the EV market as well. If you had to invest in the future of cars in EVs, would you rather invest in Tesla or the legacy automakers? Of course, you're free to do whatever you want to do, but the facts and numbers are saying the same thing, that is, Tesla is still winning this race. Talking about innovation and EVs brings us to a very common debate. Is Tesla a car company or a tech company? What's happening with their innovation? This actually brings us to the next investing lesson, and that is markets focus on future potential. Investors often prioritize a company's future growth prospects over its current performance. So this is a topic that gets discussed so often. If you think of Tesla as a car company, the stock is very overvalued. However, if you look at Tesla as a tech company and take into account all the future potential, that's when the stock price starts to make a little bit more sense. During the earnings call, Elon Musk discussed plans for more affordable EV models and advancements in AI with the Optimus bots. He stated that the Optimus bots represent a significant leap in their AI capabilities. This is basically underscoring Tesla's commitment to innovation. Now, it's up to you to invest in it or not, but you cannot deny that they are trying different things. Also, there's a question of autonomy and robotaxis. We just had the robotaxi event recently. It was quite interesting to see, but a lot of people are still not believing in it. During this earnings call, they announced their ambitious plans for launching driverless robotaxi services in California and Texas by next year. As you know, with Tesla, the timeline may not work out. However, what they do, they often end up doing even if the timeline doesn't work out. This can also lead to significant boost in revenues and various different forms of revenue streams in the future. Generally speaking, understanding a company's long-term vision can provide valuable insights into its potential for sustained success. You're free to be skeptical. You should question it. However, do not overlook it. As we have discussed, while Tesla is doing all this, they also focus a lot on their margins and efficiency. This actually brings us to the topic of margins again and the next lesson, that is, margins matter. Tesla's strong operating margin highlights its ability to maintain profitability even during challenging times, as we saw in 2022. Benjamin Graham wisely stated, "Price is what you pay, value is what you get." And when it comes to value, margins are very important. This is also why the stock price had gone to $100 when the margins were going down, because people were becoming more and more skeptical if the company is doing well. Healthy margins indicate that a company can withstand economic downturns and competitive pressures while generating profits. And the reason why people have loved Tesla so much in the past is because they are so good at maintaining their margins and efficiency. I'm not going to continue talking about this further because we have already discussed margins in the context of efficiency. It's very important. The general advice when it comes to investing is that always look at a company's margins before deciding to invest in it. They could be generating a lot of profits and not be making any money. That's not the best company to invest in. When you make money, you also have to keep money, because if something goes wrong, you have to weather these storms and survive as a company. A great example of this is what happened to Fisker. It died, and you don't want to be investing in such companies in the future. Talking about surviving and other EV companies brings us to the next investing lesson, that is, compare within context. Whenever you are evaluating a company like Tesla, you should always look at their market position in the context of all the other players in that market. Tesla stands out in an industry where EV companies struggle with profitability. Almost all of them continue losing money when it comes to selling EVs. Some of them lose so much money that it's unimaginable that somebody is investing in them. If some of these were public companies, I would not be investing in them at all. Overall, comparing within context helps investors understand the true strength of a company and its competitive advantages. By analyzing industry benchmarks and peer performance, investors can gain a clearer picture of a company's relative success. This contextual understanding is very critical to making good investment decisions. You have to look at the numbers, you have to look at the future prospect, you have to look at the management, you also have to look towards the leader of the company. Elon Musk is super controversial, but everybody who works for him always says that he's a very efficient leader, and it's a very strongly held belief. I specifically brought this up because I wanted to talk about it more in detail. More recently, Elon Musk has become very political, and a lot of people are debating whether or not it's hurting Tesla. Very recently, when the stock price of Tesla was going down, a lot of people were blaming Elon Musk for his politics and his support for Donald Trump. So now think about it this way. Nothing has changed. He's still supporting Donald Trump more so than ever. What has changed is that they came out with a blowout quarter and the market is rewarding them for it. This brings us to the next investing lesson, that is market's indifference to personal politics. Politics and controversies come and go. But what sticks around is a good company with good financial performance, and that's what the market always focuses on. Your personal politics can come in the way of you making money, so be careful of it. Don't let it get in the way of you making money too much. There are lots of things that I also don't agree with it. Just because I don't like Mark Zuckerberg doesn't mean I don't want to invest in one of the best companies in the world, that is Meta. Just because you have some arbitrary grudge against Bill Gates doesn't mean that you should not be investing in one of the best companies again, that is Microsoft. Trust me, it's going to be very difficult for you to find a company where the CEO does not speak about anything and only focuses on work. They are human after all. You are free to disagree with them, but when it comes to investing, please try to stick to the facts and the numbers first. This is one of the most important lessons I try to impart to my friends as well. The market focuses on financial performance and future potential rather than personal views or politics. This is something I tell people all the time. Even if you don't like Elon Musk, for whatever reason, it doesn't matter. There are over 100,000 people working at Tesla. Try to invest in some innovation just for the sake of them. Of course, as long as the company fundamentals make sense to you, only then you should be investing. So those are all the things I wanted to talk about in this video. When I was listening to the earnings call yesterday, these were some of the things that were going through my mind. For me, I love the company. I love their innovation and I hope more of their products make it to market. I'm waiting to buy a Tesla as well. If I get to see Robotaxis, great. If I get to see autonomy, that's also great. If I get to see Optimus, that would be amazing. And when it comes to investing in the stock, I do hold a big position in it, but I also believe in the vision of the company. As Elon Musk himself says, if you don't believe that Tesla is more than a car company, you should not be investing in it, and I believe the same. On that note, I'll see you next week in a new video. Till then, keep learning and stay on top of your finances. Until next time.